This is Scott Becker with the Becker Private Equity and Business Podcast. We're thrilled today to be joined by long-term regular guest Rick Kess. Rick is a partner at RSM, the premier sort of middle market private equity consulting firm. They do amazing work. Rick talks to us regularly about what trends he's watching in the private equity world. Rick, we're at the start of a new year. What is the projection for this year? What are you watching? What do you have your eye on? Uh, Anything that you could share with us that you think will be sort of the things to watch this year?
Yeah, Scott, I think, most of the community that we talk with within private equity, I'd say seems to be optimistic or bullish on 2025. I think, we've all talked about interest rates for a long time and, maybe the direction is still downward trend, but maybe not the same speed that we were perhaps hoping for or expecting in the past. But still, I think overall relatively positive on the side of the interest rate environment. I think the job environment, should still be a little bit tight, but maybe less tight than it was perhaps a year or 18 months ago. And inflation, obviously, I think has continued to be relatively subtle in nature compared to what we saw maybe in 21 and 22. So I think all the three kind of key economic factors that kind of weigh in on key decision making from executives, I think continue to be in the favorable direction of activity from a M&A perspective, whether it be platforms or bolt-ons. And I think just kind of in the calendar of where we're at and, kind of thinking back to where we were, 4 years ago or so, I think we're getting to that turn period in timing where, we'll have, some of the debt window, the 5 year term on the debt window kind of resetting and things of that nature. So I think there'll be a lot of factors that will push transaction activity or recapitalization activity in 2025 that I think we continue to be bullish on activity and volume. And I think the folks that I talk to on a regular basis continue to be, but obviously, only projections, right? We don't know anything that, isn't out there in the public or, maybe kind of a little bit pre-public, but all said and done, I think we continue to be relatively positive on the direction of where we think the M&A activity will go in the PE community.
No, it sure seems like it. It seems like the big deal firms have already really gotten going already, meaning the big funds. And I'm starting to see more capital calls, more action, more commitments, more deals being done by the mid-sized private equity funds as well. Is that what you're seeing too? And then talk to us for a second about healthcare services and what you expect there.
Yeah, I think as we talked, kind of in the latter half of the last quarter, Q4 of 24. I think we were seeing the same trend you were seeing, kind of the large funds, kind of making some moves early in the period. I think obviously their resources and capabilities are slightly different than the middle market funds that RSM typically tends to service. And so I think we're continuing to see the true kind of core middle market funds, looking forward to 2025, thinking now is the time for them to act. And I think we agree with a lot of that sentiment. I think in terms of healthcare services, I think we touched on this perhaps, again at the tail end of 24, but, the direction of the administration that will be taking over here in the next couple of weeks, I think tends to be somewhat favorable to healthcare services, at least from a deal environment perspective. I think the previous administration was a little bit more staunch on some of the M&A activity within healthcare and a little bit more conservative in that perspective. So I would say we're I think thinking that the M&A activity will be a little stronger in 2025. And I still just think just generally with the demographics of the United States aging into Medicare eligibility, and how quickly that number continues to rise. the addressable market of Medicare Advantage continues to be a really frothy investment thesis that we continue to hear just tons and tons of interested parties in and figuring out how far they want to go into Medicare Advantage, how much risk do they want to take in terms of kind of value-based care and things of that nature, and how do they think of that in terms of how they would disrupt the kind of typical kind of fee for service environment that like the large health systems kind of operate in on a large scale. So I think that thesis continues to be interesting, and one that I continue to be really, really interested to see how far private equity will go down the path of really trying to get into, a value-based care fee, model, and, Medicare Advantage kind of being the fuel to that fire.
Fascinating to see the movement of Medicare Advantage and fascinating to see how much this administration will keep on doubling down on Medicare Advantage after the first Trump administration did and the Biden administration did. And it seems to have caused so much upheaval in the market, but we'll see if it keeps on being doubled down on. We'll see. It's a fascinating question as to what happens with Medicare Advantage. But right now it does seem like it's pretty much, if not full steam ahead, serious steam ahead, and we'll see how that goes. But fascinating.
Yeah. Yeah. I mean, I do think the consumer element of Medicare Advantage is also fascinating, just kind of knowing how they package those products for seniors, between, just different types of services that they're able to bundle into, their one premium, whether it be, prescription drugs or fitness and wellness and other things that they continue to kind of put together and package for seniors to really allow them to put together what makes sense for them individually. So I do think because of that consumer element, because of the element of value-based care within Medicare Advantage and how, both, like you said, both the Trump and Biden administrations really look towards Medicare Advantage as an opportunity to enter into value-based care, from a Medicare perspective. So I think those two elements are really interesting. And then the obvious, piece that, you have just a ton of people moving into that market, aging into Medicare eligibility, and then the percentage of people that continue to opt into Medicare Advantage versus traditional Medicare. I just think that because of that, there's just a lot of investment concepts that make sense there, just given the addressable market.
No, I think that makes a lot of sense, and I love your perspective on it. Quite frankly, I've been sort of personally negative on the Medicare Advantage situation. I wouldn't say on the market, the business, but on sort of how it's played out and the cost to America and stuff like that. But we'll see how it plays out. Rick, I want to thank you for joining us as always. Rick Kess, partner at RSM, best in the business. Thank you so much for joining us today on the Becker Private Equity and Business Podcast.
Thank you, Scott.